Markets around the world, including Bitcoin, have rallied significantly from their Q4 2022 lows. Bitcoin up 100%, the S&P up over 25%, the Nasdaq up over 30%. This has been a relentless pump to the upside, not giving too much in the way to the downside. And so the next question that most are asking, many that missed out, are saying, when is this correction? When is the correction coming? And I'm going to show you some data today, just the facts. We're looking at the facts today that suggests this significant correction may not come. So prepare wisely now. So I'm going to prepare you, go through all that data today, looking at Bitcoin, looking at the SP 500, looking at things like the Nasdaq as well, because things are starting to heat up intensely. And the bears are still missing out. They're still sitting on the sidelines because of economic data, because of what the Fed is going to do next, because of any particular news event coming up that they have been told to wait for in the second half of 2023. This is going to get hot and many are going to miss out again, which leads to an almighty boom and catastrophic bust. There will be a significant bust, but probably at the worst time for most people. Now, I've got a significant amount of data to get through, so like and subscribe. Thanks again for joining me here on the channel. You know what it is, your home of macro cycle analysis, where we study the past to forecast the future. We cover everything: Bitcoin, stock markets, commodities, and of course, the biggest markets in the world, real estate markets. This leads and drives everything, even your little altcoin degen projects out there. Now, if you want to understand more about this, link in the top of the video description takes you across to TIA Premium. This is our education software and programs and courses. I'll talk more about this later, but there are dozens and dozens of hours of structured content there to help you get ahead, help you accelerate in the markets. All right, guys, let's start off with Bitcoin. Lots to get through, a few recaps, but primarily looking at BTC and the stock markets as well, because this data is absolutely incredible. All right, Bitcoin 200-week moving average. I thought I'd just turn this on to have a look at what has happened in the past. The current environment is showing that we are in a bull market. I hope you can see that now. Higher lows on the macro, higher highs forming. And if in fact this is the start of the bull market, which we suggest it is, and we've talked about this from the lows, June, October, November, even that significant low in March, where I'm on record saying this market is not going to go below that March low for significant reasons that we've covered, then this is going to get very painful for many that are waiting. 200-week moving average is an interesting one here, because if this is the breakout that we've seen just now, we've broken out of the first accumulation zone and we're in this reaccumulation zone, then Bitcoin in its history has not come back to test the 200-week moving average, except for a black swan event. I know some people are waiting on a black swan event. I know that is a fool's game because there is just no certainty in a black swan. That's why it is a black swan. So barring any of the black swan events, this market does not come back and test the 200-week moving average, and it only gets further and further away from the 200-week moving average. So that gives you a way to prepare for what is potentially coming next if we do start to see any sort of big moves to the upside. Of course, it can come back. There are no guarantees in the market, and maybe eventually we come back and test the 200-week, something that we haven't done before, and we may in fact do it. But if we don't, then we can start to see how far away this market can move. And as the bull market continues on, it gets further and further from the 200 weeks. So if we zoom in, have a look at the first move out of the break. So you have the test of the 200 week, you got 24%. We can go as close as this first break above, and the retest was about 17% away from the 200 week moving average. At its peak, you can see it was about 50% away from the moving average. The next peak, it was about 60% away from the moving average. On the closest retest, it got to about 28% to the 200-week moving average. And as you can see throughout the history of that bull market of 2017, it only got further and further away from the 200-week moving average until the end, where it started to close in on it, tested it for the bear market, and then of course the rest is history. The signal and the indicator repeats. At the extreme, it got over 70% away from the 200 week. We went on that first pump, and using these lows here in December of 2019, it got as close as about 21% from the 200 week. Yes, I've talked about that before. It is the black swan event. If you want to include it, definitely include that. There is that one opportunity in history. But of course, this is the most fearful time, and most miss the most fearful times. If most got those lows, then we wouldn't see the low that low. The low would be well and truly higher because many would be buying up at higher prices. You just wouldn't get that effect to the downside. So sure, we could include it, but nonetheless, any other time in history, this thing has been extremely far away from the 200 week, and it only gets further and further throughout the bull market until the bear market hits and it rolls over and we test it. So this is the first time in history that we've gone underneath the 200 week, and now we are above it. Are we going to play with the 200 week and start to test it and roll underneath and above it until we get into the next stage? Potentially. So there's still that option as well. I don't want to completely close the door on it. I'm just using the data that we've seen in history that this bull market in 2017 and the 2020-2021 bull market basically didn't come back, barring the black swan event. So that only shows this market could keep running away. Just like what I've looked at when it comes to Bitcoin here and the MVRV. Once it leaves the green zone, so the green buy zone that happens in the bear markets, it doesn't come back into the green zone until the next bear market, which is essentially 3 to 4 years away, the crypto bear market. Again, the only time it did for a very, very brief moment was, you guessed it, the pandemic low in March 2019. And so we have quite a long period. In this case, is about 4 to 5 months. Here was about just over 12 months. And then recently we've seen it at about 9 or so months, basically from that June low that we looked at here on the channel, then the FTX low in November, and then the March low, the banking crisis low in March 2023. So that gives you about 9 months to accumulate. Anyone that wants more time than that, it's just not happening. It doesn't happen in history. You can see here this was 14 months. Yeah, it was slightly longer, but the prices were higher, much higher. So sure, you got that extra time, but it's at higher prices. So now could be that opportunity that you get in, but it's at higher prices. So you weigh up the probabilities for your own portfolios. But essentially, the idea here is once it leaves the green zone, it doesn't come back until the next cycle. And that next cycle is, like you can see, approximately 3 to 4 years away. The other thing that we looked at in a recent video was the possibility of Bitcoin escaping the $30,000 range, because we have been in this price range for 13 months. And the price range is from the June bar of 2022, which is basically 17K low to about a 31K top. And typically price does not last in these zones forever. You got 9 months previously for one price zone. The price of Bitcoin remained within those price parameters for 9 months. We had another one bar here on the bear market. There was 8 months that it remained within this price zone, broadly speaking, of course. Then it collapses out of it. And then the peak here, 17 months. Yes, it did break out of it a little bit, but basically came back into that zone. And the same deal at the top, 13 months. And so we're now in this zone for 13 months. And it's getting towards the end of it. It's possible that we do see the market leave, just like this data is showing that we don't come back to the green zone, which means we would be leaving again. And the bags that are packed, the door is open, getting ready to slam the door shut on those who are still waiting for more downside. And so it looks like the same sort of thing potentially is going to happen again for Bitcoin and the 200-week moving average, where it just looks like it starts to edge away from it and edge away from it. And then before you know it, it's 50% away from the 200-week moving average, and everyone is chasing their tails. That's typical of the Wall Street cheat sheet. We've gone through this a lot of times. Even at the lows here, talked about the possibility of we being in disbelief. So I posted this in March when we had that crash, the banking crisis crash, and I'm looking at this as definitely a disbelief. This is a suckers rally. Most still aren't on board. We are getting to that point where people see it, but they're still scared about entering the markets. So it just comes back to the psychology of the market. The Wall Street cheat sheet here. And because we're seeing these rallies early on, you're getting that state of mind being that it's disbelief. And most are saying, well, no, we've still got some anxiety and denial and panic to get through. It's like you've seen a market go down 75%. Can't keep getting so greedy to the downside when a market bounces back 100%. This is the mindset. It'll go lower. It'll go lower. It'll go lower. You know, it happens on each of these significant lows, and the lows just keep getting higher. So keep a chart with you. Note these things down on your own chart, and this helps settle all of the emotions. So you become a better investor and trader over time. It sucks. These things take time, but that's life. Everything takes time. And you're playing against the best people in the world when it comes to financial markets. If you think it's going to happen in a day or two or a week, or, you know, you're just going to get it lucky, you know, maybe guess again. This is what happens, mindset, and you got to keep improving that as the markets go on. So SP 500 and the Nasdaq have some crazy data for the second half of 2023. It's almost as if there is zero chance of the markets coming back to be negative in 2023. And I say that because of the data, not my opinion or trying to put some sort of FOMO into people. It's literally the data itself. Now we have a couple of patterns forming here. We've got the bull pennant, and it's a very similar sort of thing here. Falling wedge obviously looks different to these two here, but you've got an ascending triangle, a slight upwards bias, maybe a bull pennant, maybe the rising three, which is essentially like a falling wedge, but on a shorter time frame here. Nonetheless, it's a similar sort of outcome. So call it whatever you want, but it's a similar sort of outcome. And this is happening at the resistance levels, those previous tops. This is the Nasdaq, push higher. So the reason I go through a lot of these stock markets is because this is where the bulk of the money is. And if we have risk coming into these markets, meaning investors are interested in putting their money into the market to make gains because their money isn't making them the same sort of gains in the bank or holding it in cash, hoping and waiting for a correction, then they've got to put it somewhere. And they typically come to the markets. And then once they see that all these gains are gone, they potentially come over to Bitcoin as well, because there's a higher beta play. There is more upside potential in Bitcoin than there is in the stock markets. So you follow the trend. I'm going to get more money in Bitcoin. Well, I'm going to throw my money in Bitcoin rather than in the stock markets if I have the opportunity. Nonetheless, the patterns are still forming out here. For the Nasdaq, there's our bull flag, pennant flag. We are forming above now the previous resistance levels, or on them as well. And this looks like it does want to push higher. And in terms of a significant correction, I think we saw that back in June. So it's very possible that we've seen the correction. Once we break the top, then that will confirm that that's more than likely the correction is in. But for now, we're just seeing higher lows form, lower highs. We're at the end of a pretty solid move to the upside. This is potentially just buying time to wind up for this pattern before you get the breakout. So nothing is confirmed yet, but the pattern is looking pretty solid for another move to the upside. The S&P 500, same sort of thing is happening here, except you got the higher high and higher lows, which is why I brought up this, because you've got an ascending triangle, which is bullish. You've got a bull pennant, which is bullish. So the bull pennant's on the Nasdaq, and the ascending triangle here is on the S&P 500. And again, when you look to the upside, you've got some more resistance levels overhead at 46 and 48. Things are still looking pretty bullish. And how have most missed this? Before I get to that data, how have most missed this? I think this article pretty well sums it up just a week ago that Neil has put together here. Wall Street analysts and economists, and I've also thrown this on Twitter to say that it could be social media analysts as well, pro traders, guys who've got pretty good followings, that sort of thing. They have a tendency to fall in love with their forecasts. They don't like to admit when they're wrong, and even if the evidence against them piles up, they may stick to their guns. And some even double down saying this is going to get worse. This stubbornness helps explain. We want to know why. How do they always miss it? Explain why Wall Street is having an exceptionally hard time letting go of the idea that a recession is just around the corner. Even if the recession is just around the corner, the charts are saying up, the markets are saying up, investors are buying, the lows are getting higher. It's just the facts from the charts. When you see these bullish patterns play out, are you going to keep trying to fight against them and keep shorting the market and keep waiting? A lot of people are waiting back here in April and May for a further move down. They were waiting at March for a bigger move down, and now they've missed out on this huge run to the upside. And this potentially explains the mindset of some of the smart money in the game who are missing out. And eventually they'll have to throw their money in because they aren't making gains for the people who they're managing money from. And that starts to spur on bigger moves to the upside. Now over to some of the data. And this needs a little bit of clarity, but nonetheless, I've got it here from a great channel, Seth Golden. He's also on Twitter as well. So shout outs to Seth. Fantastic information time and time again. This shows us, I know it's a bit hard to read, but bear with me, the S&P 500 second half and year returns after an above average first half of the year. So first half of the year, it's been above average. That's the fact. The chart has been up and it's been an above average return. There's January. Here we are now. You can't expect most first halves of the year to go from 3,800 points to 4,400 points every single year, a 17% gain. That is an above average return in the first half. And then layer on top of that, following a down year. So last year, 2022, was a down year. Remember how springs work? They wind up and they burst to the other side. So we had a big push to the downside, big move, and now the first half of 2023 has been incredible, an above average return. The S&P is up 86% of the time in the second half and 100% of the time for the entire year under this scenario. The market is up 100% of the time, 12 months later from that point. If you want to bet against that sort of data, which many of these bears and Wall Street economists and pro traders and investors on social media, they continue to say that I need to be cautious, I need to have my money on the side just in case. Their just in case is costing a lot of money. They are losing a lot of money by being on the sidelines in the just in case scenario. The markets have said there's no just in case scenario. The just in case scenarios, in case you're wondering, they come at the peaks. They come as the market is screaming up in new all-time high territory for a long period of time. Just in case the market falls, that's when you want to be worried. Not at the bottoms. The bottoms are the safest times because you're closer to the lows than you are to the highs. It's pretty simple. So the S&P return for these years, so basically these are just the years. This was the return for the year, then the negative, then the S&P return for the first half of the next year. So look at this as 2022, 2023, S&P return second half of the next year. That's what we get. And S&P return for the next year as well, the total year. 100% of the time, market has been up and the average has been 30%. We're basically at that point now, so we might even see a bigger return this year than what the average is showing. The maximum has been 45%. So in case all that was a second language to you, essentially the data is showing the end of the year is going to be a positive return for 2023. There is zero chance, based on the data, that we are going to go below 3,800 points for the S&P 500, which probably means Bitcoin as well is going to at least maintain its levels, if not continue to grind a little higher from this point. That's pretty wild data if you ask me. Now, I've got a lot of other data, and I know the video is getting a little bit longer here. Essentially, this one here is the spread between dumb money and smart money confidence. This is just part of the data. The confidence levels were quite spread. You can see this is the smart money. They were fearful at these tops, and they've been wrong in this case. So it's actually been better to be buying up these markets. You know, they've been buying the dips, which isn't too bad. The market's going up. They've been extremely fearful. And for the dumb money, they've been really bullish at the tops, but the market keeps going up. So we had this huge spread. And then when this spread comes together, so you can see the spread is starting to move now, and the spread is starting to come down. So they're starting to come more in line, which means maybe the money is going to move together. Just having a look at the data here quickly, we see that over the next 6 months, there has been 93% hit rate of positive returns. So the market is up 93% of the time, 6 months later, after this signal happens. When that smart money and dumb money come together, they're all seeing the market together. Markets are going up because everyone is seeing the same thing. Great. We see the markets up higher 6 months later and 12 months later. You want to bet against that, waiting on the sideline, hoping that we get a bigger correction. It's really starting to stack up against you. I know most here aren't like that. And if you aren't here, I don't know, hit the like and subscribe button, show your support for the channel as well. I've been presenting you this data for a very long time. We've come through the lows in June, in October, in November, in March, all those times when the markets have been very, very bearish, expecting lower prices. We've been here time and time again, showing the data itself, not the emotions. These traders, these professionals that for some reason or another, they get very emotional and they start leaning towards their economic data rather than looking at the facts of the charts. Now, you do have a 7% chance of the markets going lower in 12 months' time. There has been one opportunity here. But I prefer not to bet against a 93% probability that we're going to see higher prices in 6 months' time, basically meaning we're probably not going to see this significant correction. And by significant, I mean coming back to any of these levels that most have been waiting for during this next 6 months of the market. Now, there's so much data, again, showing this, but I think I might save one of these for the next videos as well. We've got the VIX to get through. We've got the June swoon and midsummer rally. All I got from thanks to Seth Golden. So go and follow Seth on Twitter as well. Fantastic account if you want to cut through some of the noise. Great guy as well. So I'll get through some of that data in future videos. But for now, you guys get the picture. It looks like Bitcoin is moving away from these levels, which it has done in 2 of those previous bull markets, all of the data that we have there. And barring this chance here, barring the collapse from the COVID pandemic, it gets further and further away from the 200-week moving average over the course of the bull market. Like and subscribe. Top of the video description is our TIA Premium membership, full-on structured courses and trading communities, weekly live streams that we go through all of the markets as well. So plenty of value in our membership. As I said, link in the top of the video description. Check that out. Otherwise, I'll see you back here at the next video for your home of macro cycle analysis across all of the financial markets. Thanks again, guys. Until then, peace out.